4 stocks on my watch list for potential buys this week. Like many of you, I put money to work on my portfolio on a weekly basis, so every single week I'm looking for either new positions to add or old positions to increase my overall position size. So in today's episode, I'm going to showcase the 4 companies and kind of explain some of the bullish reasons for me purchasing at the moment.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
Before we go any further, I want to share the 4 stocks, and they're going to be hitting all different types of market. First, we're going to hit the advertising market with Alphabet, which is down roughly 26% from its all-time highs. Then we're going to take a quick look at Qualcomm, a semiconductor company, down roughly 30%. The next 2 are going to be super high growth companies that are down a nice amount. We're going to have Shopify, which is down roughly 79%, and we're also going to have Block, formerly known as Square, which is down roughly 72% from its all-time highs. Before I take a closer look at all the bullish reasons, I just want to take a closer look at some of the bearish reasons and some of the things affecting the stock price right now. It's always important to understand what risks are looming with our investments. Let's start off with Alphabet. The overall macroeconomics is slowing down the advertisement market, and they're also seeing competition from the likes of TikTok. If we take a closer look at Qualcomm, this is a semiconductor company right now, and they are heavily dependent in the kind of mobile space at the moment. And right now, as consumer spending is expected to decrease, Qualcomm is in a fearful state that, hey, their product and their revenue is going to go down if consumers are not going to buy as many mobile products as they used to. If we take a closer look at Shopify, the overall macroeconomics is kind of shifting consumer spending, and e-commerce is not a priority, especially the kind of products that are sold in Shopify store. Finally, we have Block, formerly known as Square. Very similar reasons can be used for Block as well, as they do have e-commerce solutions, but if you kind of look at their Cash App and kind of Fintech solutions, this is a company that also depends a lot on transactions, and with less e-commerce selling, it means in theory there are less transactioning happening, which means less money for a company like Square and Block. Alright, so now that we know some of the bearish reasons affecting the stock, let me take a closer look at some of the bullish reasons for all these companies. So one of my favorite reasons, especially during this kind of macroeconomic climate, is they all have a strong financial health. I mean, Google, 125 billion in cash and short-term investments, 95 billion in trailing 12 months of cash flow from operations, and only $13 billion in long-term debt. So this company has plenty of cash available to it. To my surprise, I would have expected Google to kind of made a few acquisitions recently, but I guess they're kind of holding back at the moment. If we take a closer look at Qualcomm, they do have a nice amount of debt, roughly 15.5 billion, but they do have 8.8 billion from cash flow from operations in the trailing 12 months and roughly 6.9 billion in cash and short-term investments. So if you add those 2 up, they'll be financially fine, and as an investor, I wouldn't have to worry as much. If we take a closer look at Shopify, 6.9 billion in cash and short-term investments, roughly 900 million in long-term debt, so plenty of cash to cover all that, and they are positive with 124 million in cash flow from operations in trailing 12 months. And the final one is Block. They have roughly 7.9 billion in cash and short-term investments, way more than debt, which is roughly 4.7 billion, and they have roughly 716 million in cash flow from operations in trailing 12 months. So fundamentally, I have no kind of worries for any of these companies in the short term. And if you're enjoying the episode so far, make sure to hit the thumbs up, as it does help me grow my overall audience. If you want to support a little bit more, make sure to subscribe using my link at fool.com/Jose. Finally, if you want to learn a little bit more about the semiconductor market, make sure to subscribe to my newsletter. The link is down below. So now let's look at individual bullish reasons. Let's move on to Google, right? Their last earnings report was July 26th of 2022, so a little bit over a month ago. Even with overall macroeconomics, they were still able to grow 13% year over year in revenue and 16% on a year over year growth if it was constant currency. Compared to the same time last year, Google Search and others continues to grow dramatically. YouTube ads at the moment didn't see much growth, but that's okay. I don't see YouTube going anywhere, and YouTube Shorts is actually being pushed to be super strong. And as a content creator, obviously I see a lot more of what's happening behind the scenes in YouTube, and I believe this revenue is gonna increase dramatically with a lot of the new partnerships that they're working on. We can see overall Google advertisement was up dramatically. Another strong market is obviously Google Clouds, which grew probably around 30 to 40% compared to the same time last year. Even though Google Cloud is still not profitable for Google or Alphabet. It is one that I believe will be a big player in the future. I'm also very big into the advertisement market, and one of my other big players is Meta Platforms, and I would like to keep a 1-to-1 ratio. Meta Platforms is kind of passing it already, so for the next few weeks I probably am going to add Google before I start adding back to Meta Platforms, and just trying to keep that evenness between these two players. All right, so the next one is going to be a semiconductor giant known as Qualcomm. They did report their earnings on July 27th of 2022, and I am going to share some of their thoughts here. I want to say Qualcomm is probably my third largest individual semiconductor stock I owned. It's one I'm really excited for the potential product releases that it has. In its most recent earnings, they grew 37% year over year, driven by huge growth in numerous markets. And here we can see a closer look at individual revenue. Handsets grew 59%, RF front-end grew 9%. The automotive market, even though it's super small, 350 million, grew 38%. And one of my favorite markets is the Internet of Things, which grew 31% year over year. I do want to say the automotive market is super small at the moment, but they have roughly $19 billion in design wins in their pipeline. So this can definitely be a very big portion for the company's total revenue in the future. The one I'm more excited about is their IoT segment, their Internet of Things, which hits numerous markets from consumer, edge networking to industrial. They expect by fiscal year of 2024, this will roughly be a $9 billion business, and I do believe that is extremely possible with all the new products and chips that they are working with. A prime example is on September 2nd of 2022, Qualcomm and Meta Platform kind of created a partnership for a multi-year agreement for Qualcomm to develop their chips for the Meta Quest platforms. We already know how big of a push Meta is doing into the virtual reality, and to be choosing a company like Qualcomm, which is already in their other platform chips, I think it's a big win for this company outside of just the mobile devices. Next, we have e-commerce giant Shopify, and this is probably one of my favorite growth stocks at the moment, even though it has taken quite a hit, and many investors might not be too happy with the stock. Right now, we can see in their most recent earnings, the company only grew 16% compared to the same time last year. We can see year over year they are growing in gross merchandise volume, which is very important for a kind of e-commerce company. They are seeing increased adoption of pretty much all the other products that they're seeing. Shopify payments, for example, is up 22%. Their Shopify capital is up roughly 15%. Gross profit growth is up 6%. And they are kind of releasing new solutions and new products as well. If we take a closer look, what gets me excited about Shopify is they are making partnerships with whoever's popular at the moment. They have partnerships and kind of integrations with companies like TikTok. They recently announced a partnership and integration with YouTube on July 20th of 2022, like Shopify Editions, and one of my favorite things is actually Shopify collabs. The most recent on August 21st of 2022, they did launch Shopify Capital in Australia ahead of peak sales season. So they are still expanding. They're also expanding internationally, and I've done plenty of videos kind of covering all the bullish cases on this company. I do want to say, unfortunately, right now they are changing some of their top leaderships, which could be seem a bit scary, and they did reduce their workforce by a bit, by about 10%. So not a bit, a nice amount of people unfortunately lost their jobs. This in the future in forms of business looking is going to help overall the company make sure they're not burning cash as fast as they previously would, so that financial health should be stable for the foreseeable future. All right, so the final company is going to be Block. For a company like Block, I think it's very important to take a closer look at certain metrics outside of revenue. First, gross profit was up 29% year over year, and this is the metric I like to follow. It is also up quarter over quarter. If we take a closer look at Square's gross profit, it's up 29% year over year, and again up quarter over quarter. Their Cash App gross profit was up 29% year over year and was also up quarter over quarter. So to me, this is a company that's still expanding. Their products are still used fairly well, and right now the overall macroeconomics obviously is hitting like the Bitcoin revenue segment, so they're not taking that kind of gross profit from there, which would probably be in the Cash App gross profit. But even with that, the company was still able to grow year over year and quarter over quarter. I mean, if you take a closer look at their investors news website, they continue to release new products. For example, Square sellers on August 23rd were able to kind of offer buy now, pay later through ClearPay. They've also announced numerous kind of partnerships here as well. And to me, this is a company that continues to innovate. I want to say out of the four companies, this is probably the one I consider the most risky. I do want to say, even though Shopify is a growth stock, I believe the e-commerce market and all the solutions that they have are going to be a huge winner in the long term of things. Google and Alphabet, I want to say, are more mature, especially Google. One, I'm not too worried. One, I'm just gladly happy to continue to add to my portfolio. Qualcomm is already a big giant in the semiconductor space, but it is kind of transforming into new markets, and that's what I really like about it as well. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.